And our next guest is turning bullish on tech, one of Q1's worst performers. Let's bring in Drew Pettit. He's director of U.S. equity strategy at Citi. Drew, you guys have kind of run through the numbers. Say if there's a 10% tariff, we're talking about a 6% hit to earnings this year. Is that already priced in now?
Not fully, I would say. To some extent, taking 500 points off the S&P did take out, or I guess price in some tariff risk. It doesn't really bake in any ongoing concerns. It doesn't bake in us going above 10% on kind of baseline tariffs. And honestly, on the other side, it doesn't bake in any of the carrots here, which could come in the form of deregulation and tax cuts in the back half. So again, not fully priced in, but we definitely took a lot of froth out of the market in Q1.
Can you tell us a story about the market rallying today in the last couple of days? I mean, is it about those carrots you mentioned, taxes and deregulation? Is it about tariffs and maybe the hit not being as big as feared? Is it just literally wait and see?
I think it's a lot of wait and see. Again, we've come off a pretty weak quarter, a pretty good drawdown from peak to trough. Again, pricing out a lot of good news. So again, probably a lot more wait and see. Probably not going to be good for all the sell side strategists trying to sleep tonight after the 4 o'clock announcement. But honestly, it's just getting past some of the negative news, and maybe we can get to the wait and see on potential positive news later this year.
And maybe it will be so much information in a way that the head. So, for instance, Sky News is saying, OK, the tariff announcement could be 10% on some countries, 15% on others, 20% on others. But the market can kind of just see 10 and go, yay, 10. It's not 20. So it's sort of like, what's the relief in the moment that the announcement is not worse than feared? What's the nuance that might keep the market from freaking out too much about it? But to Tobin Marcus's point a few minutes ago, the actual impact is yet to be seen and could be decently large.
Yeah, so this is, again, markets forward-looking, not backward-looking, and the S&P being a little bit more disconnected from, Main Street, this go-around than it has in the past. But kind of setting those things aside, if we feel like this is going to be a cap and we feel like the rest of the world response is not going to match the United States in magnitude, that is, let's call it hopeful in a sense that we're not going to go down the trade war spiral. So in our numbers, which you cited earlier, that 10% increase in tariff is a 5 to 6% hit on EPS. That's over 12 months to start. And then the second point is that actually bakes in retaliatory tariffs that are, let's call it half the level of what the U.S. sets on its trading partners. So again, we're not pricing in a spiral. The market's not pricing in a spiral. But the hope for today is we get some resolution on at least the point of potential maximum pain.